let me try to solve this illustration. It's one of the comprehensive illustrations related to the debtors, bad debt, discount on debtors, and provisions on that. In the trial balance, debtors is given as 10,000 rupees in the debit side and bad debt, discount on debtors also available. In credit side, we have been given the provision for doubtful debts and provision for discount on debtors. So these are the things are available. And apart from that, in adjustments also we have been given bad debt, provision for doubtful debts, discount on debtors usually not given in the adjustments, but may be possible that may come in the adjustments also. So here I have given this in the adjustment. Provision for discount on debtors. So what is the requirement here? What are the requirements we have to fulfill here? Pass journal entry, prepare ledger for bad debt, provision for doubtful debts, discount on debtors and provision for discount on debtors, and as well as how this will appear in the balance sheet and P&L as an extract. So these are the things that are going to be completed in this illustration. Now, whenever the bad debt and the discount on debtors appearing in the trial balance, what does it mean? With regards to these two, the adjustment entry is over. So you no need to pass the adjustment entry for these two. But of course, we have to pass the transfer entry. We have to pass the transfer entry. And whenever we have been given the provisions, the credit side of the trial balance, in general, it is called as opening provision. Opening provision. Whatever the things available in the adjustment, where bad debt and provision, discount on debtors, these two are again, we have to adjust with the data. So this will be first passed as an adjustment entry and then transfer entry. And then the PDD as well as provision for discount on debtors given in number 2 and 3, number 2 and 4 is meant for the next year's requirement. Okay, next year's requirement. Is that clear? Before I proceed this, let me give the format here. Format here. How this will appear in the balance sheet, how this will appear in the P&L account. Let me start with a small working note here. The working note starts this way: debtors. Debtors. The value being 10,000. Whatever the things are there in the adjustments should be now subtracted from there. So bad debt and discount on debtors. These two should be first of all subtracted. Discount on debtors. The value for bad debt and discount on debtors being 200 and 100. 200 and 100. Now let me pass the adjustments entry here. Adjustment entry. Okay. Adjustment entries. So I have to pass the adjustment entries for what? Bad debt and discount on debtors, right? What is journal entry for that? Bad debt account debit. Bad debt account debit. Yeah. To debtors account, to debtors account, the value being 200. And of course, we have to pass the entry for adjusting the discount on debtors. The entry will be the similar one. Rather than the bad debt, I am going to debit discount on debtors. Discount on debtors. Okay. This discount on debtors being 100. To debtor. By passing these two journal entries, what happens? The debtors balance will be decreased, right? That's why I am subtracting these two. After subtracting, whatever the balance left over is nothing but the amount we expect may be realizable in the coming days. Okay, after a bad debt. And even the good debtors will ask for the discount, so we won't get that 100 rupees. So out of 10,000 rupees, 200 rupees bad debt definitely will not get it. And we thought 9,800 could have been receivable, where one of the debtors claimed some discount. Okay, we offered another 100 rupees. So we expect 9,700 could have been realizable. And we still have some doubt. There may be possible of some bad debt as well as discount also for the remaining amount to be collected. So whatever the expected loss in the future, we make a provision for that. That provision comes under provision for doubtful debts as well as provision for discount on debtors. These two will be calculated from here. So minus provision for doubtful debt. Provision for doubtful debts, PDD in short. Okay, DD, which is 5%. On this you have to claim 5%. So the value being how much is that? 400 and 9,700 into 5%, 485. After subtracting that, the balance being 9,215 minus provision for discount on debtors. This value being 2% on this, so we have to calculate 2% on this. The value being 184. Am I right? Subtract that 184. Finally, you will be getting 9,031. 9,031. This will appear in the balance sheet. This block will appear in the balance sheet. This block will appear in the balance sheet's asset side. Now, I pass the entry for, see here I have passed the entry for the bad debt. Okay. Next one being the transfer entry. I'll just keep this discount on debtors will be passed later, not to confuse you. Finish up the bad debt alone separately, bad debt provision for doubtful debts. Bad debt account debit to debtors 200, it's over. Then the entry being what? We have to adjust the bad debt, okay? We have to adjust that. So, you keep it in your mind simply. I am going to deal with the bad debt. This bad debt is going to be adjusted in the which account? PDD account. If the PDD is not sufficient, we can adjust that in the P&L account. So, how much PDD we have in the beginning? We have 200 rupees in the beginning. The journal entry being PDD account debit, PDD account. When we use the PDD, it is going to be debited. When we create, that PDD account should be credited, right? So, I am now using how much we have in PDD? 200 rupees. 200 rupees. What is the bad debt we have currently? To bad debt. How much bad debt we have? No, it's not 200. 200 plus existing 300 is also there. That should also be transferable. Both put together, it is around 500 rupees is the bad debt to be adjusted. And we are in shortage of how much? 300 rupees. Whenever we are having some shortage, that shortage will be adjusted in P&L account. So I am going to debit the P&L account here. So P&L account debit to bad debt. The value being 300. The value being 300. Not only that, in the coming year, we need to have some provisions. For that also, we have to create the provision, right? So, provision required for the next year being 485. This 485 can be created by debiting to the P&L account. So, profit and loss account debit to PDD account. When we have the PDD in the credit side, it means it's only a creation. It's only creation. This value being 485. It is better you can club these two entry and pass this as a single entry. You can club these two and pass as, combine these two and pass this, that as a single entry. If you do that as a combining entry, PDD may be eliminated. So simply it may be summation of that. So I will handle it later. With that, PDD case is over. Now we have created the discount. For the discount given in the adjustments, we have to pass the adjustment entry. While passing the adjustment entry for the discount and debtors, debtors contributed to debtors is over. Now this discount and debtors should be adjusted. Where to adjust the first? Should be adjusted in the provision for discount and debtors available in the credit side of the trial balance. If the provision is not sufficient enough, we can use the other account also. Now let's see here. Provision for discount on debtors. How much we have provision in the beginning? We have 500 rupees in the beginning, right? So we have 500 rupees in the beginning. Two, discount on debtors. How much is the discount on debtors here? 100 rupees in the adjustment. Already we have 200 rupees existing in the P&L account. This is trial balance. If you club these two, 300 rupees will be adjusted. Okay. Now there is a surplus. That surplus can be transferable to where? To P&L account. This value being 200 rupees. And we need to create the provisions for the next year, right? How much provision required for the next year? 184. Whenever we create the provision, it should be credited, means credited. When we use, then it should be debited. So here on use, the provision is debited. Now for the next year, I have to create 184. That may be possible by debiting the P&L account. So P&L account debit to provision for discount on debtors. This value being 184. This value being 184. We of course combine these two journal entries also. We can combine comfortably. If I combine, what happens? This entry being, on combining this entry being PDD in the debit side and PDD in the credit side. As we have the PDD in the credit side excess, so 2 PDD will be there. 2 PDD, provision for doubtful debts. 200 rupees debit side and 485 in the credit side. Ultimately, the PDD should be 285 rupees. 285. And profit and loss account in the debit side 300 and 485 in the debit sides. In total, 785 should be in the debit side. So profit and loss account. Profit and loss account debit 785. 785. Apart from that, so we have completed the P&L account. So bad debt is there. The bad debt should be in the credit side. So to bad debt. To bad debt. Okay, the value being find it. Now verify whether it's matching or not. So debit is matching the credit. Same way for the provisions also we can combine these two. If I combine, what could be the journal entry here? Provision for discount on debtors debit, provision for discount on debtors credit. Okay, if you are clubbing that, you have the ultimate balance only in the debit side. So provision for discount on debtors. Okay, provision for discount on debtors. This value being find. Discount on debtors 300 rupees in the credit side. No offset is possible. So to discount on debtors, the value being 300. And in P&L account, credit side 200 and debit side 184. Okay. Isn't it? Provision is, yeah, net of that. How much is that? Come on. 316. Now if you net off that, then the difference being, yeah, P&L account difference 16 rupees to P&L account 16 rupees. Is that okay? This is the logic you have to understand. Now we have passed the journal entries. We have to understand the preparation of the bad debt, provision for doubtful debts, discount on debtors, provision for discount on debtors all. Now, so I will prepare that separately here. Right, let's see here. So what are the accounts are going to be prepared here? Bad debt account, bad debt account, then provision for doubtful debts account, discount on debtors account, discount on debtors account, and provision for discount on debtors account. What are the items already exist in the balance sheet, in the trial balance? We have to post that first of all. For the better understanding, I'll just keep it here. Let's see here. I have taken the trial balance and adjustment entries. We already found out that, right? Trial balance is here. Adjustment entries passed. From the trial balance data, I am going to incorporate all these adjustment entries to find out the closing data. It is better to open the debtors account also. So I will open the debtors account here. Debtors account. Now, this debtors having the debit balance will appear in the debit side. Balance brought down. Balance brought down. The value being 10,000. This bad debt already available in the debit side, so balance 300 rupees. Discount on debtors 200 rupees already available here, so balance 200 rupees. And PDD balance in the beginning, credit side 200 rupees. Provision for discount on debt, provision for doubtful debts. Balance in the beginning 200 rupees. Provision for discount on debtors, opening balance should be in the credit side, the value being 200. 500 rupees, 500 rupees. Very good. What are the balances available? Trial balance, I just opened that account and posted the either debit or credit sides without any trouble. Right. Apart from that, I have to incorporate the adjustment entries. Bad debt account. In bad debt account, two debtors. The value being 200. In debtors, by bad debt. Am I right? So you don't have any confusions, only a posting 200 rupees. Discount on debtors, so we have to open the discount on debtors to debtor here. Two debtors 100. In debtor, by discount on debtors, the value being 100. And PDD account, two bad debt. In PDD, two bad debt, 200 rupees. In PDD, its value should be posted, the opposite term should be used. Don't get confused. The opposite number should not be taken. And in P&L account, we can open the P&L account also. Okay, we can open the P&L account also. Let's see. Now, I'll remove this. I will open the P&L account here. P&L account and balance sheet extract. Profit and loss account as well as balance sheet. We will not prepare completely. Only to the extent needed we are going to prepare. In P&L account, two bad debt. In P&L account, two bad debt. The value being 300. In bad debt, by PDD, okay. By PDD, the value being 200 rupees. P&L account 300 rupees. Okay. In bad debt, we have two items. The opposite means you have to write all the two items. And this one, P&L account 2 PDD. 2 PDD. Okay. 2 PDD. This value being 485. Okay. In PDD, by P&L account, 485. And here, provision for discount on debtors, we have to post two discount on debtors. Value 300. Profit and loss account 200 rupees. Profit and loss account 200 rupees. Discount on debtors. In discount on debtors, by provision for discount on debtors. The value being 300. In P&L account, by provision for discount on debtors. Isn't it? Provision for discount on debtors. 200 rupees, the value being 200. Its own value should be posted. Okay. Similar in discount and debtors, 300, correct. Then in P&L account, provision for discount and debtors. Provision for discount and debtors 184. Right. And here provision for discount and debtors, in provision for discount account by P&L account 184. Okay. By P&L account 184. Is that okay? By passing the entry, we can transfer to the concerned ledger, and from the ledger we prepare the balance sheet as well as balance sheet, means P&L account as well as balance sheet extract. Now, if I tally the bad debt, it's a nominal account, right? This will disappear hereafter. It will not appear anywhere. This will not appear anywhere. And PDD account, if I tally this, 685, we end up with 485 as a balance carried on. Discount and debtors is a nominal account, so will not have any balance, got eliminated. Provision for discount and debtors 684, 184 is the closing balance carried on. And if I tally the debtors, this balance being 9,700 balance carried on. 9,700. Now, the ultimate value being 785 debited in the P&L account. The ultimate value of this being 16 should be in the credit side, right? Now, what are the leftover items are there? Debtors. The value being 9,700, and provision for discount and debtors, doubtful debts, as well as provision for discount and debtors. These two balances we have in the credit side. Either it may be posted in the liability side, or it can be subtracted from the PDD, putting that in the inner column. 485. So 9,215 minus provision for discount 184. Then what is the ultimate value? 9,031. Is that okay? The behind the scene is this one. Don't study all the things blindly. Anyhow, let me explain here. Okay. Hope this may be clear with this. Whatever the transactions may be related to the bad debt as well as provision for doubtful debts, you can pass the entries. And after passing the entry, if you prepare the P&L account and balance sheet, you will be getting the exact one. But by skipping the steps here, you can work out this straight away in the balance sheet and P&L account. How do I work out that straight away in the P&L account as well as balance sheet without passing these kinds of entries? Right. In balance sheet, okay. In balance sheet, what we do is very simple. This block will come in the balance sheet. This block will come in the balance sheet. So, debtors 9,700 minus PDD 485, 9,215 minus provision for discount 184, outer column 9,031. See, we are skipping so many journal entries to directly post that in the balance sheet. So it's your duty to understand the behind the logics as you are being the professional student. Of course, you might have studied this way also. Pretty simple to get the answer. Okay. Verify this. The balance sheet value what we have arrived here also same 9031. With so much of journal entry and passing into the ledger, we prepared this, and or we can straight away get this way. Straight away get this way. Now the next question is how this will appear in the P&L account, sir. While posting in the P&L account, let's see here. In the profit and loss account. In the profit and loss account. This is the process you have to follow. Bad debt given in the trial balance to be adjusted now. Given in the trial balance to be adjusted now. Bad debt given in the adjustment should also be created now by charging to the P&L account. Provision for doubtful debts. Provision for doubtful debts to be created for the next year's requirement given usually lies. From there, subtract the provision for doubtful debts already available, which is nothing but the opening of given in the trial balance. Ultimate value is nothing but transferring this balance to the either debit side or credit side. If the value is positive, put that value in the debit side. If the value is negative, put the value in the credit side. So the bad debt given in the trial balance being 300, bad debt given in the adjustment is 200. Provision for doubtful debts in the adjustment being 485. So the overall value being how much? 985. Provision for doubtful debts already available in the trial balance being 200. So the ultimate value transferable there is 785. If you keep these 4 lines in your mind, of course you can solve the comprehensive illustration. There is no any problem in that. But how do I get that 785 in the accounting way? So we have passed so many adjustment entries, and by posting that we can get the answer comfortably here. Right. So the amount we debited with respect to the debtors and bad debt and provision for doubtful debt is 785. We got the same answer, but it's a working note like we can get it easily. Working note like we can get it easily. Repeat the same process for what? Discount on debtors also. So discount on debtors given in the trial balance. Given in the trial balance. The value being 200. Okay. The value being 200. Discount on debtors. Then discount on debtors given in the adjustments to be added. Provision for discount on debtors in the adjustments will also be added. Minus provision for discount given in the trial balance to be subtracted. Discount on debtors given in the adjustment is how much? 100. Provision for discount on adjustment 185. So the total value 184. Okay, 184. The total value being 484. What is the balance already we have? 500. As the value is in negative, you have to transfer that to opposite sign. Okay. This is the logic behind. Hope you could now understand the comprehensive illustration. Come on, make a note of it. So while we make the payment to the creditors, they offer us some discount. That should be subtracted. So here we are going to deal the discount on creditors. Discount on creditors where we don't have the provision for that already, or we no need to create any more without provision model. Whenever the discount on debtors or creditors given in the trial balance, it means with respect to that one, adjustment entry is already passed. You no need to do adjustment entry again. But we need to pass only the transfer entry. Transfer entry is nothing but the amount is transferable from discount on creditors to P&L account. That entry will be passed. In adjustment, 200 rupees discount on creditors is given. What does it mean? For this adjustment entry is pending, and then we have to pass the transfer entry. So we have to do first of all the adjustments, then we can go for the transfer. Right. Before you transfer to the P&L account income statement, you have to finish off all the transactions, right? As on 31st March, you have to complete all the transactions in the form of journal entry. Post that in the ledger and prepare the trial balance. If something missing, then you have to pass the adjustment entry, and to rectify that, rectification should be done first of all, or adjustment should be done first of all. There's a slight difference between adjustment and rectification. Error is there, that is rectified. Okay. Adjustment entry is nothing but where we are not aware about some of the documents or some of the data as on the date of preparation of the final accounts. Okay. How much money may be expected to be bad debt? Not sure, sir. Not sure, sir. Only on exactly 31st March I came to know, or sometimes later only I came to know. Sir, the amount we supposed to collect from X being 2000, no more collectible. No more collectibles. That becomes the bad debt. Because of unawareness, I am not able to pass the entry, but I can find out all those things exactly after the preparation of the trial balance, but still balance sheet is pending. Then we can pass the entry, then it is called adjustment entry. So that slight difference between adjustment entry as well as rectification of errors. Whatever it may be, rectification or adjustment or any omission should be passed first of all, and then we can go for transfer entry. So here I am going to pass the entry for adjusting this one. The item given in the entry, this is a remedy for us. If we reduce the creditors balance, usually creditors debit balance, right? Because of the discount, this balance will decrease. So I am going to debit it. So creditors account debit. Creditors account debit to discount on creditors. Discount on creditors. This value being 200. The next entry being transferring the discount to the P&L account. We have to now, we pass the adjustment entry, now we have to pass the transfer entry number 1 and number 2. Both put together will be transferable. Debit the P&L account debit to discount on, sorry, it's the revenue, no, it should be credited, sorry, I missed. Discount on creditors should be debited and to profit and loss account, 300 for that adjustment entry is already passed, and the 200 adjustment entry just now passed. Both put together will be transferable to the P&L account. So 300 plus 200, 500 rupees should be transferable here. We have done this. Is that okay? If we don't have the discount and so if we don't have the provision, the simple journal entries are these two. Right? Come on, make a note of it. Provision for discount on creditors. So I am going to introduce that here. The provision for discount on creditors should be in the debit side. So provision for discount on creditors. Okay. This value being ₹800. Second adjustment here. Provision for discount on creditors required to be maintained. Okay. At 2%. At 2%. Is that okay? We have to pass This one, no, discount on creditors already given, no. Further adjustment entry is already passed. Don't worry about that. So we have to pass only the transfer entry. The provision for discount on creditors available as 800 rupees in the debit side might have been created in the previous year. Okay, previous year itself it might have been created. How? By crediting to P&L account, right? So P&L account and the provision account. That's how it might have been created. You don't bother about that in this year. In adjustment, if we have the discount on creditors means, for this we have to first of all pass the adjustment entry. After passing the adjustment entry, whatever the discount on creditors is there should be transferred to the P&L account, right? So that will be called as transfer entry. So we have to pass these two entries. And provision for discount on creditors given this adjustment meant for the next year. Okay, next year. So we have to create it. We have to create it. Let me pass entry after entry. This is the previous year detail. You don't bother about that. So first we have to pass the entry for the adjustment. Finish of adjustment, right? Creditors should be now reduced. Usually creditors credit balance, to reduce that it should be debited, right? Why do I reduce the creditors? Because they have offered us a discount. So they themselves told us not to pay this amount. So very happy in that. We reduced 200 rupees. Next entry is all about the transfer entry. While transferring the discount on debtors, we have to first transfer to the provision for discount on creditors if it exists. Else you can transfer that to P&L account. Second entry is all about, this is adjustment entry. Now this is transfer entry. Transfer entry. In transfer entry, the entry being discount on debtors should be debited. Discount on debtors account should be debited. The total value being 200 rupees newly created, already 300 rupees available in discount on creditors. The total discount on creditors available being 500 rupees. 2. Provision for discount on creditors. How much we have already in the beginning? On usage, it is going to be, the debit balance is going to be used. So it is going to be credited 800 rupees. The difference between these two, 300 rupees, can be simply transferable to the P&L account. So means to the P&L account debit side. Transfer entry. Okay. Okay. This is discount on creditors. Discount on creditors. Okay. The third entry is all about what? Provision supposed to be created for meeting the or adjusting the discount on creditors in the later period. For that, we have to credit to the P&L account by creating provision for discount on creditors in the credit side. Discount on creditors, okay. Debit. Provision for discount on creditors debit to profit and loss account. How much is that? 10,000 rupees is the existing creditors. Before you pass the entry for the third, you have to make all the adjustments related to the creditors. Here is a creditors amount, rupees 200. That should be subtracted. If I open the creditors account, from 10,200 rupees is subtracted, we have only 9,800. On that 9,800 only, we have to create the rate of 2%. 2%. 196 will be the value. Naturally, we can club these two entry. So if I club these two entry, what could be the journal entry here? Discount on creditors debit side 500 rupees. Discount on creditors 500 rupees. Profit and loss account debit 300. Credit 196 leads to 104 in the debit side. P&L account debit side 104. Am I right? Provision for discount on creditors 800 credit, 196 debit leads to, okay, provision for discount on creditors in the credit side being 604. This way also you can pass. How this will appear in the P&L account as well as balance sheet, that extract. Okay. If you want to show that, I may show that also now. Right. Now I am going to post the number 1 and number 2 directly rather than 2 individual entries here. This way also you can work out. This is up to you to decide. We'll start with the creditors account. Creditors account, balance in the credit side 10,000, and then here is creditors to discount on debtors, sorry, discount on creditors. I missed here also, discount on creditors 200. No more adjustment required for the creditors. If I tally this, I will end up with 9,800 rupees in creditors balance. This will go to the balance sheet. This will go to the balance sheet. Liability side, creditors 9,800. And now we'll move on to the discount on creditors. Discount on creditors. Start with the credit balance, value being 300. Because of the first journal entry, again we are posting in the credit side as by creditors, value rupees 200. As second and third entry clubbed, I just straight away pass the combined entry here. Here the discount on creditors being the debit side, so to provision for discount on the creditors, to provision for discount on creditors, the value being 500. Discount on creditors is a nominal account. Always remember that in the case of nominal account, at the time of closure of the books of accounts for the year end, it becomes 0. It becomes 0. Then what we have to open the provision for discount on creditors account. Discount on creditors account. Start with the balance in the debit side, so opening balance. The value being 800. And here provision for discount on creditors is in the credit side, so by discount on creditors, value being 500. Profit and loss, the value being 104. If I tally this, 800 rupees, 800 rupees, I'll get the balance carried on being 196. Remember, this is not a nominal account. Definitely it will have the balance will be transferred to the P&L balance sheet. As this is the debit balance, should be posted in the asset side, or you can subtract from the liability side also in the creditors account. So provision account. The value being 196. The ultimate value being 9,604 will be the value. How this will appear in the P&L account? In P&L account, very simple. This only item available in the debit side. Provision for discount on creditors 104. Is that okay? Come on, make a note of it. It's provision for doubtful debts account. Actually, provision for doubtful debt is a credit balance, right? Whenever it is being credit balance, the opening balance should be in the credit side by opening balance. And 2, closing balance should be in the debit side. If the provision increases, should be credited. If the provision decreases, it should be debited. When the provision increases, when you create by charging the P&L account, it will be increasing. Create. When the PDD is going to be decreasing, when you are using for adjusting the bad debt, that time it may be decreasing. Bad debt. Okay, usage. Very simple. You keep this in your mind, no need to mention that here. This question number 4 was asked in CMA Inter carrying only 2 marks. Such a questions very often you can expect. The company maintains 10% of debtors as provision towards bad debt. It has routed all bad debts through the provisions account. All the bad debts are routed through the provision for doubtful debts only. The opening balance of the provision as on 1/4/2012 was 68,000. In the beginning, how much we had? 68,000 rupees. The closing provision, that is on 31st March 2013, was 92,000. This is nothing but closing provision requirement, which is 92,000 being the closing balance. Bad debt written off debited to the provision account was 28,000. How much is debited to the bad means provision account this year? 28. Usage also given. How much should be debited to the profit and loss account towards the provision for doubtful debts for the year end? So how much? It's only a balancing figure. The value being 1,20,000 in the debit side, 1,20,000 in the debit side, and the amount supposed to be created here being 52,000 rupees. Am I right? Balancing figure. So simple. For that, it's 2 mark. See, passing the journal entry and preparing ledger and adjusting all these things while posting that in the P&L account and balance sheet is the knowledge purpose. Is that for knowledge purpose? But in the examination, sometimes you may be asked to prepare directly the PDT here. For the preparation of the PDT will help us to get the amount supposed to be created as provisions from the P&L account, which is 52,000 rupees. Is that okay? Come on, make a note of it. For doubtful debt should appear in the credit side, 13,000. The bad debt during the year 13 and 14 were 9,500. Sundry debtors as on 31st March 2014 stood at rupees 3,25,000. Right. So debtors in the debit side of the trial balance will show 3,25,000. And bad debt in the debit side of the trial balance being 9,500. Out of these debtors, 2,500 are bad and cannot be realized. It means still further 2,500 will be the bad debt. Might have been given in the adjustment, isn't it? So bad debt given in the adjustment being 2,500. The provision for bad and doubtful debt is to be raised to 5% on sundry debtors. So PDD to be raised here being 5% on sundry debtors. What we have to do? For the bad debt, we have to pass transfer entry. For the bad debt given in the adjustment, we have to pass the adjustment entry and then transfer entry. These two transfers happens routed through the PDD account, and this will be created. This will be created. Is that okay? Now, the entry for bad debt adjustment entry. Bad debt account debit. Bad debt account debit to debtors. The amount supposed to be created here is this one, adjustment entry, 2,500 over. Second entry is all about transfer entry. While transferring, we have two items here to be transferable, so I am clubbing these two. That will be routed through PDD only, no? So while using the PDD, I am going to debit it. So PDD account debit means usage or use. To bad debt, to bad debt. The value in bad debt being 9,500 plus 2,500, 12,000 rupees. 12,000 rupees. But we have the PDD of rupees 13,000. We have the PDD of rupees 13,000. Surplus 1,000 can be transferable to the P&L account, right? To P&L account. 1,000 can be transferable. How much of the PDD you have to maintain now? The PDD required to be maintained here is 5% on the debtors available by the time. So P&L account debit to PDD created. As per the trial balance, debtors being 3,25,000. Because of the first journal entry, this year's bad debt 2,500 is subtracted. The ultimate value being 3,22,500 only realizable after the bad debt given in the adjustment. On that 5% will be created. See it? 16,125 to be created. 16,125 to be created. Is that okay? 16,125 to be created. See, the other way of posting sometimes may be given in the text like this. Rather than transferring the P&L account, here we write this as 12. Here we adjust only 15. That way also it may be posted. That's how it's given in the text. You can verify that also later. Right. Pass necessary journal entries for bad debt and its provisions. We have done that. Prepare the necessary ledger account. So we can prepare the ledger account for debtors, PDD, bad debt for these three. And show the relevant items in the P&L account and balance sheet. Okay. Hope you are able to read this. So I am going to open all the concerned ledger. Okay. Debtors account, bad debt account, provision for doubtful debt account, and how this will appear in the P&L account and balance sheet. Okay. From here it's the final accounts, right? PDD given in the trial balance 13,000. In the credit side, no, it will go to the credit side of the PDD account, opening balance. This balance being 13,000. Debtors being the debit balance, I will start with the opening balance in the debit side. 3,25,000. Bad debt should be in the bad debts debit side. Opening balance 9,500. Because of these adjustments, we have passed the adjustment entry as well as transfer entry. I am going to incorporate that here. Bad debt. In bad debt, two debtors. This value being 2,500. In debtors, by bad debt, the value being 2,500. In PDD, two bad debt, 12,000. Then to P&L account 1,000. So we have to post these two. In bad debt account by PDD, the value being 12,000. In P&L account, 1,000 should be in the credit side, PDD. And in P&L account, 16,125 should be in the debit side, PDD. Otherwise, I can neutralize these two. Am I right? 15,125, isn't it? 15,125. I am neutralizing that. Clear? And here I have PDD being 16,125 in PDD by P&L account. 16,125. Already here is 1,000, so we can utilize that one also if you want, or you can post that way also, no problem. That. So 15,125. Or I am able to make the adjustment here itself. So the P&L account 1,000 is eliminated. 12,000. In credit side we have eliminated 1,000. No, in debit side also we have to eliminate the same extent. 15,125. 15,125. Similarly, in PDD, it's not 16,125, it's only 15,125. So what did I do? I have eliminated 1,000 rupees from the PDD debit side as well as credit side. I have eliminated 1,000 rupees in P&L account in the debit and credit side. So the ultimate value is this one. Or it's your own choice. There is no any harm in it. By solving the debtors account, 3,25,000. 3,25,000. The balance what we have here is 3,22,500. We'll go to the asset side of the balance sheet. So as debtors, the value being 3,22,500. Bad debts nominal account will be eliminated. So whatever the method you would have, this will be eliminated. And provision for doubtful debts, 28,125, 28,125. We end up with a balance of rupees 16,125. That balance is supposed to be maintained. That's how the question is there, right? That amount is supposed to be maintained. Can be subtracted from the debtors account, 16,125, and balance will be shown as a debtors balance. Is that okay? Come on, make a note of it. 8 marks. For this, it is 8 marks.